What's going on, everybody? Michael Silva here. You're watching the Stock Market Brief show. This is the show that we use technical analysis and intermarket analysis to get a good idea as to where the market might be headed next. Today's episode is a weekly recap. So we're going to be going over weekly charts, some daily, some even down to 15, and some stock market indicators. We use technical analysis, intermarket analysis. It helps me get a good idea as to where the market might head next. Now, before we hop into today's episode, I just want to say thanks to the 659 now active patrons that are supporting me, whether you're in the $4 to just support my daily stock market briefs, or the $9 tier where I have the Discord benefits where you can be part of the community, and also where I post trade ideas, where I show potential entries, exits, targets, stops on just various different stocks and various different industries and or sectors. Your support really does help tremendously, and I can't thank you enough. As well as, even if you're not part of the Patreon, just the people that come back to view the show and say nice things in the comments, it really does help out. Because quite honest, it's been hard these last couple of weeks or so since I've left work and kind of making this adjustment, doing this full time. It's just been a really hard transition from being part of a community to being in my head 24/7. So yeah, but I just wanted to come out here and just show how thankful I am for all of your guys' support. Let's hop into today's show. All right, welcome back. We're going to first look off the weekly performance on the 11 sectors. Now you can see here, financials is leading the way. That really came about because of the last trading day performance, which was Friday, and when we had the jobs report, the bond market really did shake up. And even if you pull up a chart like on Thinkorswim, or if you look at the implied volatility of the bonds market, you can pull up the TLT. The volatility is pretty large, especially when you compare it to like various sectors and or even just the Qs. So we're seeing financials really take off here, which also something to note, a big holding in the Dow is Goldman Sachs. They saw a huge run up for quite some time now. They've been just ramping higher and higher, and that could really be helping the Dow Jones Industrials break out to all-time highs, which it did. Utilities, though, also, this is where it gets interesting, is we have some defensive sectors still up there too as well. Let's hop into the S&P 500 on the weekly time frame, still within this bull channel right here as it broke out of this broadening wedge pattern. We're going to be keeping an eye on this channel as the VXX here, you can see the volatility contracting tightly, and we'll get into a VIX, the weekly chart here soon, but still holding within the Bollinger Bands, right around the upper range of that and within this channel. So it's in bullish context overall. It never is really bearish if you're at an all-time high. Price is bullish. If it starts cracking down and closes down on a weekly time frame, then we'll start looking at some other levels. However, this chart should look familiar. I talked about this, I think, on the previous weekly recap. And I was looking at some areas of confluence as well as the PMO indicator. And when the PMO crosses over to bearish and starts heading downwards, you can see that throughout time, it puts, wind in front of our face. There's no wind at our back to really help elevate the market. And as of lately, that's not true. We crossed down to bearish right here, and it's been tracking lower. It's still way above zero, but the market has been pressing higher and higher. So it is diverging from this momentum, which is something to keep an eye on. I know plenty of people out there believe that we can never dip more than 1 or 2%, which is, like, if you really actually believe that, holy moly, I hope we don't see a 6% correction, because I feel like that would be Armageddon, right? Which it wouldn't be. A 5% correction is really nothing. We should see around a 1-10% correction, maybe more, per year. But back to what I was saying is I drew out this resistance trend line. It has tagged it multiple times previously, and when it does so, and you see the price percent oscillator, the PMO indicator, not price percent oscillator, it can really go nowhere for a year to 2 years, and we've seen that here, we've seen the divergence here, and then fell, and now we're really pulling into multiple areas of confluence of resistance right here. You can see from, if I just drew a trend from this 2019 just pull back right here, you can see it acted as support, and then we cracked through, and then we acted as resistance, and then also this trend line dating back to 2019, the confluence is right here. So if the market comes up here as this continues to head down, Look, I mean, it just to me seems that we can really honestly go nowhere for a couple of years or in a trading range and be bound to a trading range for multiple years, especially if this continues to just lose its momentum. I wouldn't expect to just see trajectory like this trajectory just to continue this rise higher and higher like this without seeing obviously a correction. So what I'm seeing here is, which we get into the daily time frame, I see the possibility to get some sort of gamma squeeze if we start getting a little bit higher, maybe 440 on the SPYs or 4,450 to 4,440 on the SPX. I see that with volume being so low, that might be the level to really attract more buyers, and we see this projection up significantly, even up to around 500. I mean, it could be that dramatic of a move on a squeeze, but at that point, I would be very, very hesitant because then it would be likely that more risk would be to the upside than there would be to the downside. Okay, now when I look at volatility on the VIX, the Bollinger Bands are still contracting. So we had a big vol crush. Clearly, it's really helped out the jobs report too. The jobs report really helped this movement down. We got that VIX crush Friday. But the Bollinger Bands are still contracting here, and they're still very tightly contracted. We haven't seen since September of 2018. And when we get these tight levels of contraction, we get expansion. So that's something to be very, very mindful of. If these continue to tighten and tighten, just brace yourself, because we're in a environment of seasonality where, mid-August, August, September, October even, the VIX volatility typically rises. Now, times are different, obviously. However, we're seeing this contraction take place in a season where we typically get higher volatility readings. So it does look like there's room to move higher, but there's also clear signals that, hey, we can, I'm not going to directional bias right here, but we can see big swings in either direction. If you take a look at the BP SPX, this was a monster move here. We're just moving right through the 50, right from this bottom, which we talked about this bottom, right? That was the opportunity where if it goes down, we can potentially, it's oversold, and then we could get in and look for bounces, and we lined that up with some other indicators. Well, the same goes for if it gets overbought. If it gets overbought, hey, put the brakes on, but it still shows room to run up here. And if you take a look at the XVG, the Value Line Geometric Index, it has still continued to diverge. However, it's right there on the brink. So if we can break out there, oh man, I really do think that the S&P 500 can get through that kind of sticky 4440, 4450 range, and we might get just some, it's a possibility to see something pretty extravagant of a melt up. If we look at the percent of stocks above the 50-day moving average and the 200-day, we finally cracked above and it's starting to trade higher here. If we get more breadth in the market here, then yes, that will help to see that a very significant type of move in the S&P 500. So we'll keep an eye out to see if that continues to move higher. Like I said, one day doesn't really give us a lot of information. We got to see how the market wants to digest this jobs report. And, it's interesting to me because the jobs report, it was really good, which is, bullish for the economy, right? Growth and so forth. We have a couple red flags like the Delta variant, and we have a couple red flags like inflation, and we had the Fed basically saying that many of the Fed members are saying that we're looking to tighten soon, but Powell isn't really clear on when and what that looks like. And to me, I mean, it almost seems like they're being pigeonholed right here, because if we have another strong jobs report, well, I mean, wouldn't they then consider tightening? Well, I don't know, but if they do tighten, well, then, I mean, I think that's going to put a lot of pressure on the equity markets. And I don't think that the market hasn't realized that yet or priced it in yet. And if that is the case, we might see a flood into some sort of risk off assets, which we're not seeing now. I mean, right? They're just all-time high is what currently has been going, and that's the flow of price. Another good note is the equal weight index did break out to all-time highs, and that does match the SPX. So that divergence is no longer diverging. So we got to continue to watch and see this move hand in hand. This has been getting out of a trading range for quite some time. So this is actually a positive development to see, as long as we can remain still obviously above. All right. The S&P 500 on the daily time frame, we did break out to all-time highs, still in very bullish just context overall. The price percent oscillator looks like it's crossing over to bullish right here, and it's been relatively flat. So yeah, the price has been drifting higher. Momentum has been kind of sideways. Not much going on other than price is just very bullish here. So yeah, we might come back down, tag a 20-day, tag even the 50-day. The 50-day would even probably act as more support now if we had a big move to the downside, because it's in confluence with the lower Bollinger Band. And every time that the 50-day has been touched, we just pull back and then rapidly move from it. So that is the market environment that we're living in. And right now we're floating not really too dramatically over it, but if we keep getting extended, just note that we have risk to the downside and we have a little reward to the upside, the reward being obviously the upper Bollinger Band, and that obviously can get expanded. Like I said, if we get above this, it's at 4,436. If we can get above 4,440 and hold that level, 4,450, there's a very strong possibility that we just get all of a sudden a big boom in volume to really just launch this market into outer space. The SPYs broke out of this trading range, but really it didn't do so that well. We broke above it and we held above it, which is positive, and it's forming a tight little pennant pattern right here. So let's see if we can get a break above that. If we get a break above that, I think we double. I think we'll move probably the same length without resistance from 436 to 442. So 456. I think it'd be easy to see us break from 442 to 448 to 450 is what that move would look like to me, to see the next potential area of resistance. Dow Jones, let's look at that. Dow Jones on the weekly time frame, all-time closing high. Look, it's diverging from the price percent oscillator, but the price percent oscillator has been kind of rounding itself right here, and you can see the histogram ticking up. So that's a bullish sign, and the Bollinger Bands have been contracting a little bit here too as well. We're still holding the weekly 5 EMA as well, so everything is in bullish context. If you look at the daily time frame, we broke out of this trading range, which is positive. We have the upper Bollinger Band sitting at around 35,427. So that is a couple hundred points more ahead of us. That's something to keep an eye on. And we can hit the tag, we can tag it, and we can still drift higher. So that's always a possibility. But this is a good bullish move so far. What we don't want to see happen is this to revert and head lower. Same with the S&P 500. You want it to see it break out and continue pressing higher. You do not want to see this, in the futures market. This is a possibility. If futures market breaks out, but then all of a sudden retraces back within this channel, that's not going to be the greatest sign. So you want to see these breakouts. You want to see them hold. Let's go back to the Dow Jones. We're going to look at the 15-minute time frame, still actually within this broadening wedge pattern, but it did form a pennant pattern here too as well. So a breakout of this and a breakout of that channel would be a good development there. If you look at transports, this is kind of the only negative sign for me, is they continue to diverge. Meanwhile, the industrials are breaking out to all-time highs. So the divergence, it's going to matter eventually. It will. Now, it's going to matter in a very good positive way or a negative way. Why could it be positive? Well, if we break out of this and we get back above the 50-day, that's going to be a really good sign for the Dow Jones Industrials. Now, keep in mind, the Dow Jones, one of the components is Goldman Sachs, and Goldman Sachs have been doing exceptionally well. So that's... if Goldman Sachs starts to lag here, which, obviously when we saw the 10-year yield, the TNX ramp up higher, it really did help out a lot of the financials. And obviously the Dow Jones, because that was one of the top performers there. Let's look at the Nasdaq 100, still just trending up higher and higher within this kind of bull channel right here. And then volatility laid off a little bit here, but we're still within this also technical pattern here too as well. And we are grinding right around the upper range. To me, I think that if we continue to see strength at a decent rate of change with the 10-year yield, and the bond market's pricing in higher growth, more inflation, I do see that this will be taking a little bit of a breather. Are we there yet? I don't know. Like I said, one day doesn't make up enough to really understand a big shift in a change. So what do we see? Up on the week, we were up about 1%, and we did finish above the weekly 5 EMA, which is a positive sign. But it's been diverging from momentum for quite some time, and the price percent oscillator here too is kind of rounding out to potentially head lower. So we'll watch tech. We'll see what takes place. On a positive note, though, semiconductors look exceptionally strong as they broke out of this multi-week base multi-month base, sorry, on the weekly time frame. So that is a very positive development. There are a lot of semiconductor stocks that have yet to break out or look like they're on the verge of breaking out. If you look at the price percent oscillator, also on the weekly time frame, looks like it's about to have a bullish crossover. So semiconductors look like a very, very positive move. The crossover hasn't taken place yet, so we don't want to see this be some sort of fake out. But as it stands right now, this looks like a positive development for the semiconductor. So keep a close eye on that in the weeks to come. If you look at the Nasdaq, the NDX here, an area that I will be watching in the weeks to come is this just area of support. I drew it out differently than I did in the previous week, and I just want to see, because it's tested it now 3 times. So if we break down through this, I think we come test the lower Bollinger Band to the 50-day moving average, and the 50-day moving average is right around 14,480. So that's something to watch out for. If we do crack, it might come down, test that area, which also in confluence with this previous little dip, and then we might come back up. Or a retest and then head lower. It's anybody's bet, but just watch out for a trend break. It does suggest, momentum suggests it, right? Price percent oscillator heading down, RSI is heading down, the 10-year, rising, the 10-year yield, and that to me spells slowing momentum here for the Nasdaq 100. If you look at the Qs on the 15-minute time frame, we broke out of this ascending triangle. We talked about that, started chugging higher. Now we're forming a little bit of a bear flag, but we're still above this big price area of support. So that's a positive sign. And we're above the 5-day moving average. So everything here looks pretty good, even despite that we saw the 10-year yield really rise. And yeah, we had a little bit of a weak trading day, but nothing crazy, like no dramatic changes happened. So it's still within bullish context. We need more time to see what would be taking place. Now let's look at the Russell. Now we know financials did exceptionally well. We talked about the possibility of seeing another hammer candle take place. Well, guess what? We got another hammer candle to take place here in the Russell. Russell's still a little iffy, all right? We can definitely, with this little hammer candle here, we're right back above the 5-week moving average, definitely see it go try to take back its 230 and hit the top of this range. More than possible, okay? The price percent oscillator looks like it's curling slowly right here. So perhaps, this could be one of the greatest opportunities in a long time to see these things take off again. Be hesitant because volatility is still rather high, right? So to see a decent week, we're up 1% in the small caps. Volatility didn't really change all too much. And we're still within this construct, this pattern, and volatility has been really putting in these higher lows. So we're going to continue to watch this and see how it develops. I'm not fully bought in here on this move yet, and I think a lot of it was driven because 20% of the holdings in IWM is financials. So if financials do continue to perform, then that would be a very good sign here for the Russell 2000. If we take a look at the BKX, this is the monthly time frame. We tagged the lower range and we started to bounce from there. So this could be the retest and head higher. We'll see, because a lot of the performance on this day or in this month has been driven by just 1 day's worth of performance. Most of the time, if you just look at the XLF, it has been range bound for quite some time. It hasn't gone anywhere until Friday. So we need some time to see what takes place. And I think next week we have consumer inflation numbers. That's going to be really the bigger market mover. So I think it's next week. We'll keep a big eye on that one. Take a look at the TNX. Now, finally, you can see a big boom to the upside right here, right into the 200-day moving average. So the trend still bearish right here, at least in the short term. We're below these main moving averages. We did recapture the 20, but we're still below the 200. We're pretty much at it. I will say price percent oscillator did cross over to bullish, putting a little bit of a positive divergence there too as well, but it is well below zero. So that's, take it with a grain of salt. It's like having a bearish crossover above zero. Just take it with a grain of salt, pay attention to it. It could be a shift, but nothing's been done yet. Truly, we've had one strong day, right? We've seen strong days completely get reversed multiple times. So be mindful of that in this environment. We need to see how the bond market digests this jobs report. And also, like we said, consumer price inflation is coming out too. And you can see here, we did have a trend line here. It did break down. So these are dramatic moves. This is a dramatic move in the TLH. You can also look at the TLT. But this could be breaking out, and then we could retest, obviously, this 200-day moving average. And we still have inclining 50-day and 100-day moving averages. After being in a bear market, they're starting to incline here. So those can definitely act as areas of support as well for the bond market. Let's take a quick look at crypto. I just want to bring up this chart it shows multiple different cryptos. We have Bitcoin, Ethereum, XRP, and I wanted to point this out because what I've noticed is, and we talked about this, I think, when it was happening with Bitcoin and Ethereum, but the golden cross, where the 50-day crosses through the 200, we said that's a bullish sign. You don't want to put way too much weight on it, but it is a bullish sign saying that the trend and the sentiment of the current market conditions is potentially shifting to more bullish. And we'll look at all the other crypto charts. Boom, crossover, 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 about to crossover, about to crossover, 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 hasn't crossed over yet. That's Dogecoin. But we have a big volume day and a big movement up 20%. I mean, geez. Starting in the crypto market. So this could be a big development. If you follow me on the Discord, I did talk about, I made a video on this indicator that started off as a joke, and it's tending to be quite useful now, and we put a little strategy together around it. But we had the buy signal just before July 25th, but I think I alerted it at 25th, and bam, just look at this thing rip to the upside. I think Ethereum's up 30% since the buy signal took place. If you haven't watched that video, just watch the video and just add this to your arsenal. You don't need to live by it, but at least be aware, because if we do get a cross, if we cross down through zero on the rate of change between these two assets, I mean, it's protected us here those times, and this time maybe it'll protect us again. All right, everybody, that's all I have for you on today's weekly recap of the Stock Market Brief show. Once again, thanks to all the patrons that do support me and everybody here that subscribes to the channel. It does mean so much to me. Have a wonderful rest of your weekend.